What's up everybody and welcome back to my channel, Mystery Money. Today we are going to discuss how to use the SBA Eidl loan. After the release of my latest video where we took the third draw of the Eidl loan, a lot of questions came up both in the comments and through emails about what exactly you can use the money for. So I thought in this video I would address the specific uses that you can use the money for depending on your type of business. Since we're in the trucking business, I'm going to use the examples of what we use the money for and what we could have used the money for. I'm also going to give examples of other types of businesses and what you could use the money for based on those specific instances. So let's talk about working capital. The SBA's definition of working capital is current assets minus current liabilities. Current assets are going to be your most liquid form of assets. In most cases, they're going to be things like cash and bank accounts, marketable securities if you do investments, and treasury bills, but that's at a higher level and probably more unlikely. Current assets have a high liquidity, which means you can convert them to cash very quickly. Go to the bank, take a withdrawal, it's cash. Marketable securities, you could sell and retain that cash. It's anything that's very liquid and fluid in your business. An idea of a non-liquid asset is going to be things such as real estate. Due to the fact that you have to sell it and then it's going to take several months for you to actually get those profits and realize that money back into your business, that's why that's a long-term asset. The reason that businesses need working capital or liquid assets is the fact that they need that to meet financial obligations for operational needs. Basically, it pays the bills and keeps the lights on. Having a healthy amount of working capital helps to strengthen your business because everyone knows if you don't have access to either cash or liquidity or some sort of credit, it can cripple a business, it can lower profitability, and it can stress you out. That's why I always recommend most businesses have at least a line of credit that they could tap into in an emergency situation. The problem is having debt versus cash is the fact that you still have to pay it back. If you have cash, yes, it depletes your reserves, but you don't have to pay someone else. So having a good mix of both cash and liquidity, like lines of credit, credit cards, things like that, only helps to strengthen your business. So now that we know what the definition of working capital is, let's talk about specific uses in our business or any type of transportation or trucking business. Working capital for us is anything from equipment upgrades, repairs, replacements. Simply because you're upgrading a piece of equipment doesn't necessarily mean you're disqualified from the use of the Eidl proceeds. Originally in the program, they didn't want you to be using the funds to expand your business, buy a building, those things. It was only to kind of help you get through the pandemic. But just because it says you can't expand doesn't mean you can't be more effective with your money, and in turn will make your business run more efficiently. Take our trucks for instance. All of our trucks from the day we buy them from the manufacturers or dealers have APUs put on them. What an APU is, if you're not familiar with trucking industry, it's basically a small generator that sits on the side of your truck, uses diesel fuel to run your air conditioning, inverters, things like that when your truck is not running down the road. So basically, instead of having your truck sitting in a truck stop idling for 10 hours a day, the APU runs instead. And these things are not cheap. They can run anywhere from $8,000 to $15,000 depending on the brand and features that you want to use. Now that seems like a lot of money, but if you think about the fact that your truck isn't idling for 10 hours a day, and the fact that with idling a truck, it never shuts down. It's running down the road when you're driving, and then when you're not driving, it's idling. So your engine is always running. Now I have a background in mechanics, so I know engines work best when they continue to run, but let's face it, the longer something runs, there's a more potential for breakdowns and other things that can happen and go along with that. Also with rising fuel prices, as anyone has seen in the news, a large engine burns an incredible amount more fuel than one of those tiny engines on the APUs. And it can give you some nice benefits such as having an inverter so you can make coffee in the morning. One of my drivers actually carries a hot plate with him and cooks his meals. I joke he should have his own YouTube channel and for cooking and tractors. But anyway, so while it's technically a piece of equipment, it's actually an upgrade to an existing piece of equipment. Because once you bolt that thing onto your truck, it's really difficult to remove and then sell. So the value of it decreases really fast. So outside of trucking, let's talk about other expenses that you can use working capital for. Let's say you're an Uber driver and you were very successful during the pandemic, after the shutdowns and things like that, and you decide you want to put your name on the side of your vehicle. Well, that's technically considered advertising. so that you can use working capital for also. If you want to upgrade your GPS system in your car so you can be more efficient to pick up people and find better ways to drop off people, which makes your business more efficient, that's another use for working capital. Or let's say you get a discount on your car insurance by paying your full bill up front. Now this would be as long as your car is solely used for your business or whatever portion of it as a business expense, such as if you have to pay additional car insurance to have that Uber business. Prepaying that saves you money, and this is another allowable expense because you can use working capital to pay for insurance. But I also don't want to forget unexpected expenses. These are going to be things that pop up from time to time. For us, it would be breakdowns or having to pay our drivers when the trucks are in the shop, so we pay them detention time, things like that. Or if you're a mobile canteen, let's say you have a food truck and you want to upgrade your griddle to a bigger, fancier, whatever, you can serve more customers, that's technically another working capital. It's an upgrade to existing equipment. With all the changes in the program that now allow you to finance any past, present, or future debt obligations, this opens up a new possibility for the money. I'm not an accountant or an attorney, so I would definitely consult them or at least speak to them before making any decisions as far as using the money. But the way that I read the program is if you have an existing commercial loan with a higher interest rate, shorter payment term, which makes your payment higher, that this money can be used to essentially refinance that debt or refinance it for a lower rate. Or if you have an existing loan that has a better rate, you can use this money to make those payments, and essentially you will be refinancing that debt over a longer period of time. Just remember, you're paying double interest rate for the same money. So if you borrow $10,000 for a car and then you get $10,000 in EIDL money, you're double paying the interest on that money. Our goal is to pay off one of our trucks that has an extremely high interest rate and then save the difference to pay on a different truck, eventually going down to where we only have one truck payment and the EIDL payment. This is going to put us in a much better position going forward, and financially it'll set us up for success in the future. But our goal is to still not have this loan for 30 years. One thing that our company doesn't deal with is inventory. But let's say you can get a really good deal by buying a pallet full of beans versus buying individual cans of beans. Let's say you're a restaurant. You can buy those beans because inventory is working capital. You are buying the inventory and you're going to convert that to cash at a later time. You can use working capital to bridge that distance. And lastly, things that you can use this money to spend are going to be everyday business expenses. Paper for your printer, fuel for your cars, technology upgrades, and basic things like that. The things you want to watch out for with the EIDL loan is the fact that you're going to be paying a 30-year term with a fixed rate, which is great, but you don't want to use long-term money for short-term purchases. As I said in the last video, if you're refinancing debt for a lower interest rate, that's going to help you with a cash crunch. But if you don't want to continue to be paying that vehicle off or equipment or printer paper over the next 30 years, use this money to get you in a better financial position and pay it back as quickly as possible. While there is advantages to having debt in business, it's also a huge burden in the long run. Owing money to someone else for your business means that there's always potentially someone that could tell you how to run it, what to do with your money, things like that. But I know most of the time in order to grow, you have to take on debt. There are ways to grow slower and you can save before you expand, but then you're trading time, which you can never get back. One of the stipulations that I want to address and you want to watch out for is when it comes to the money, if you read the loan agreement, it basically says that owners of companies such as LLCs cannot take distributions until this loan is paid back. Now, how strict they're going to be on this, I have no idea. It does not say anything about taking salary from the business. As the business owner, it just says distributions. I would be very leery about taking this money and paying yourself a bonus. At the end of the day, it's still the company's money and it's still debt on the balance sheet. But again, talk to your attorney, your accountant before you make any decisions like that. The last point I want to address is the fact that there has been a lot of news about this program lately. There are several senators and congressmen that are questioning the validity of the program and the fact that the federal government has become a private lender. I would imagine that there are large financial institutions that are having lobbyists working overtime right now to stop the government directly lending to businesses. One, because this directly competes with private institutions such as banks, but two, because the government is not in a position to be a direct lender. I don't know what the future of this program is going to be, and I don't see them coming back and calling the loans or making you have to refinance with a private institution, but I do see more scrutiny over the next months and possibly years for the program. I do believe that this program will help a lot of small businesses that are either still struggling or have struggled in the beginning of the pandemic, but I also know that there's an incredible amount of fraud that has been running rampant in the program since its beginning. If you need the money for your business, I wholeheartedly think you should at least take a shot and look at the program. But if you know you don't own a business and you're just trying to get some free money, it may not be a great time to try your luck. Thank you very much for taking the time to watch this video. If you have any other questions or comments, make sure you post them below or send me an email. Until next time, have a great day.